Hi guys, this is Ian and this is your Friday weekly market wrap-up video. It is the 30th of May 2025, just coming up to 11:15 in the morning in the UK. Volatile price action within the markets again this week. We did see a boost in indices. That's been short-lived. We've now seen a correction to the downside. DXY, which is the dollar index, is still being the dominating driver, I believe, in price action this week. We're in a corrective sequence as far as the medium-term outlook is concerned. We've got some interesting patterns forming on both the sterling against the US dollar. Euro dollar could be a diamond formation, which is a topping pattern. We've also got an interesting formation on the US dollar against the Canadian dollar. So let's get to the charts. We're going to start with DXY. We're going to move through some interesting chart formations across the spectrum of products that I look at, which is over 50. I'm going to finish off looking at the US 30 and also at gold. Let's get to the charts. So this is a trading view setup, just to highlight what we've got here. Middle bottom is the monthly chart. Then we've got the weekly chart. Let's just get rid of that. The daily chart, top left hand corner, 8-hour chart, 2-hour chart, and then 1-hour chart here. I do vary this chart between the 2-hour and the 4-hour time frame to highlight different candlestick formations, not chart formations, but candlestick formations. So I suppose the most important one that we keep on going back to is this. This is the DXY weekly chart. Now we can see an Elliott Wave formation to the downside, 1, 2, 3, 4, 5. That means that we're in this choppy and corrective formation to the upside. Now these patterns are normally very hard to trade, especially on an intraday basis. And we really have to nail down into shorter time frames to try and highlight decent patterns, symmetrical patterns, Elliott Wave patterns, to try and get in with what I regard to be decent risk-reward factors. So like I said, there's many products to look at. I swing trade, so I'm not looking at just the majors, euro, dollar, S&P 500 to try and get in on an intraday basis. What I'm looking for is more sustained rallies or corrections, and they normally last over a period of sort of 2 to 3 days and sometimes longer. So here we're in this sort of choppy possible correction to the upside. What we have seen is 4 weeks with spikes in both directions. We can clearly see that on the weekly chart, and that causes that intraday volatility. What we did see last week was quite an aggressive move to the downside, and we can note that this week's sort of rallies have been sold into. So there is scope to have a fifth wave extension. So Elliott Wave is a little bit subjective. Just because we've got a 5-wave move to the downside does not mean that we won't see a spike lower. And sometimes what happens, and we're talking about smart money concept here or the Wyckoff theory, is that we get this period of consolidation that can actually be seen as a accumulation or a distribution zone, depending on whether or not we're at the top of a trend or the bottom of a trend. And what Wyckoff says is that this is basically where smart money is accumulating positions. So smart money is actually accumulating long positions within this range, and what has a tendency to happen is that we'll spike lower, and that spike lower takes out all of these early dollar longs. Okay, so people looking to get long of the dollar in here, thinking that this is actually an ABC formation to the upside. And what actually happens is we get this fifth wave extension. It takes out all the stop losses below this previous swing low, which was located at 97.52. and then it drives to the upside. By this time, a lot of retail traders have sort of given up on the dollar long outlook. Smart money's accumulated longs, and then it pushes to the upside. And sometimes that drive higher is quite aggressive, and it doesn't give retail traders the opportunity to get long because they've sort of been stopped out, feeling a little bit upset about their previous long positions and don't want to get burnt again. So chance for accumulation, chance for a spike to the downside to take out weak stop losses. And if we look to this chart here, so this is the 2-hour chart, what we also have to remember is this is DXY, okay, so it's, although it is a tradable product on some platforms, it is mainly made up of the euro, okay, so it's a basket of dollar denominated products, and it's mainly made up of the euro. So sometimes these patterns don't align very well, and we really have to look at, or just get a bias from the DXY and then overlay that onto our dollar products such as dollar Swiss, euro dollar, sterling dollar, etc. So what I can see here is that we're currently trading below my bespoke support. Well, my bespoke level, it is support or it is resistance depending on which side we are. So at the moment it's bespoke resistance, and we can see these levels to the downside. Okay, so these make up cipher patterns. So this would make up a butterfly formation, and then this would make up a crab pattern. So what I have a tendency to do is get a horizontal line, and then we'll look for the mirroring tool on TradingView. Then place these lines across here to make them solid. Put these solid lines across the chart. He says easier said than done. Okay, and then we'll go back to the higher time frame, which was the weekly chart. Okay, and then we can see that the scope to push through. Okay, this is the first support level, which is located at 97.76, but this is the potential second support level, which is that crab pattern. So again, accumulation, spike through, take out stop losses, and then move to the upside. So that sort of gives us our bias, or our immediate bias for DXY. And I'm just going to go back to this time frame again. I'm going to talk about this indicator that I've got on the top right hand corner. This is called a Trend Predator Pro indicator, and if you look on the bottom right hand corner, it highlights fake out lows, fake out highs, and basically it gives you a roundup of what the bias is, both for the monthly, the weekly, the daily, 8-hour and the 4-hour. Basically what you want to do here is you basically want everything to be aligned. So you want everything to sort of say yes, we're bullish, or yes, we're bearish. And at the moment it's a fake out low, continuation high. So, but notice this is REV, that's a reversal. Okay, so it highlights that we're actually reversing higher from this move lower, so this AB move lower. So there's ample scope for us to hit this 99.36 resistance level and then move lower. When we get below, or if we get, it's always if we get below yesterday's swing low, which was located at 98.70, this will then highlight a breakout to the downside. What is quite interesting, as far as I'm concerned, I'm just going to pull this right up so you can see it, is this here, okay, free S. And that basically highlights that the monthly chart is free shorts. When we get free shorts, it will normally highlight that we should be seeing another move to the upside. So even though the immediate bias is for rallies to be sold into, if and when we get down to these support levels, the medium term bias tells us that we should be buying. Okay, and it's so important when we're trading, analysing the markets, that we're not just looking at the small picture analysis. So a 2-hour chart for me is the small picture analysis. Okay, this highlights the big picture analysis. So the big picture analysis is that weekly and monthly chart. So just to highlight what I've talked about in this product or this asset, is that I believe the immediate bias is to the upside, but we're going to get sold into, going to move down to these sort of levels. When we get down to these sort of levels, then the bias for me will flip again to the upside. So again, it's this corrective pattern. It's going to be mixed, it's going to be volatile. We've got to be very careful with intraday setup. So at the moment, I want to be selling dollars on a short-term basis. On a long-term basis, I want to be buying dollars. I hope that makes sense. Let's go to dollar CAD first, because this is actually a trade that I'm in myself. So I've got the bias for the US dollar, and I want to be selling into intraday rallies. I've got resistance here located at 1.3850. I believe that we're currently moving lower within this BC leg. Okay, it's a large back formation. It's 138.59 is the completion of the back formation, but we've got two support levels to the downside. So we've got 137.36, which is a cycle support. I'm not going to go into that in this video, as it's quite complicated. And then we've got 137.09, which is the weekly fake out low. Okay, WFOL, weekly fake out low. What do we have here? Monthly chart says that on a long-term basis I should be looking for longs. Got a free S. This is actually saying on a short-term basis it's a reversal continuation into an uptrend, which is what we see at the moment. But I'm expecting that to be sold into and then drive lower using the DXY, using the dollar index as my bias. Okay, driving lower to complete this BC leg and then push to the upside. If we go to this time frame, which is just a little bit more complicated, if you like. So 3 longs on the daily was here. Got a 5 wave count, 1, 2, 3, 4, 5. We should now be in this corrective formation to the downside. We're coming up to complete BC and then move down to 137.36, which is again a 3-day cycle to complete that back formation. So breaking down using the DXY as correlation or as a bias for my overall picture, then breaking down these different cycles, okay, and different time frames to highlight where I should be looking to trade. So this picture on the 1-hour chart fits in nicely with this picture on the 2-hour chart. In other words, the 1-hour chart is this formation that we've just looked at. 1, 2, 3, 4, 5. I'm now going lower in A, B, C, D to form the back formation close to this zone here. So at the moment, bearish on US dollar against the Canadian dollar. What I should say is at lunchtime today, we've got some inflation data, PCE, from the US. It's going to move markets. We've also got data from Canada. So this is going to potentially have a double whammy effect on the US dollar against the Canadian dollar. Dollar yen. Now let's have a look at sterling against the US dollar, because that's got again a sort of similar picture. If we go to the weekly chart, where are we? Okay, well, we can see a 5-wave sequence to the upside. Wave 1, wave 2, wave 3, wave 4, wave 5. This week we're going to get sort of a mild sort of doji style candle that highlights indecision. What will happen next week if we get a low close? This will then become an evening doji style formation, and that will offer us a medium term bearish bias. Okay, so what we have here again is a similar picture, or a reflected picture with regards to dollar CAD. So dollar CAD, I'm looking at selling rallies. Here I'm actually looking at buying dips within this corrective formation to the upside. So 1, 2, 3, 4, 5 should dictate that we're in this corrective A, B, C, D formation to the downside. Again, I've got a nice symmetrical pattern lining up at 131.70. At the moment, this shows a reversal. I've got free long on the monthly chart, which basically says on a medium-term bias, I should be selling rallies. So selling at the top of this three-day cycle, which is at 135.63. But at the moment, we're moving higher, okay, in this pattern as the DXY moves to the downside. If I go to this time frame, and again, it's virtually an opposite picture that we saw in the US dollar against the Canadian dollar. 1, 2, 3, 4, 5, which highlights that I should be in a corrective cycle. This is a back formation. 135.63 is a 3-day cycle. 135.67 is a back formation. So I know the target area. What I really wanted to do was get long around about 134.23. I don't think that's going to happen. You know, if I did get long around there, then it really does sort of give great risk reward setups. I mean, this is sort of 11 or 12 to 1 on a risk reward basis, because obviously if it takes the base of this swing low, which is at 134.15, then it completely takes out this pattern, and that correction is finished, and we're going to continue to the downside. So these are considered the dollar CAD, and so dollar CAD short, sterling dollar long. They're considered counter trend trades as far as the medium term picture is concerned. Okay, let's have a look at US 30 because again, risk on, risk off. What used to happen with risk off is that we'd see safe haven buying in the Swiss franc, the Japanese franc, and also the US dollar. That's sort of gone out of the correlation. There's gone out slightly, especially with regards to the US dollar. And what we're actually getting is that when stocks move to the downside, the dollar index is having a tendency to move lower as well. So US 30. Let's go to this time frame first. I don't know why they keep on going out of sync. A bit annoying, but never mind. So what has happened? Okay, well, we've got a bat formation. This is another cipher pattern, okay, called a bat formation. That completed at 42,687. So this was the boost that we saw. This was when the news about the tariffs came out, and we saw a move to the upside. That's been squashed, okay, and we've seen that rally reversed. So news sentiment traders probably got long, expecting a break to new highs. All that's happened is we've hit this cipher pattern formation and we've started to move lower. Why is this important to me? Well, any time we form an inside back pattern and we get a completion close to the 88.6% pullback level, some people can look at it at double top formations, but when we go out to bigger pictures, okay, it can highlight this leg. So what I like to see, similar to the US dollar and the US dollar against the Canadian dollar, and also against sterling dollar against the US dollar, is I like to see inside patterns inside other patterns, especially inside these sort of topping formations. So what the common retracement levels are for the BC leg in a cipher pattern is either 38.2% of this decline or 88.6% of this decline. Why is 88.6% so important? Because it gives you the opportunity to get in on quite aggressive trade setups. In other words, if you shorted here on that intraday bat formation, okay, just move it over a little bit. So let's say we got there, and we target here over the medium term, which is an 8-hour back formation, and then we place our stop loss above the previous swing high. Again, the risk reward factor that you're getting out of these potential setups is very good indeed. So this one's coming in at 13.4R. So basically every £10, €10, $10 that you're risking on a trade setup, you've got a chance to get 13 of those back for your risk reward. So very beneficial if you can get those trade setups. What do I not like about it? Why am I not short of the Dow Jones? Because these dashed black lines are my bespoke support and resistance levels, as I mentioned earlier with regards to DXY. So what I prefer, I'm just flicking back to $CAD here, is I prefer selling these levels or buying these levels. I don't like it when these levels are sort of mid-trend, if you like. So basically what I need to be able to do, I need to be able to get under this first support level, which is located at 41,990, and then sell into it. So it is support. As it breaks, it then becomes resistance, and then it gives me a selling opportunity. So my stop loss is more likely to be between here and here, and then I pick my target level. So breaking lower, retesting, and then pushing lower again. And unless I can sort of see a relevant chart formation to get me into that trade, then I'm going to pass. So basically, going back to how I trade the markets, I'm not scalping intraday. I'm looking for long-term swing setups, or in this case, sort of medium to long-term swing setups. And at the moment, it's really highlighting sterling dollar because I'm buying from a support, and also $CAD because I'm selling from a resistance level. Let's have a look at sterling yen, because I think that's quite interesting with regards to risk off. Okay, so risk off, if we see risk off, as I previously said, we should see a buying in the Swiss franc and the Japanese yen. If we see a buying in the Japanese yen, we should see selling in sterling against the Japanese yen. I'm just going to take this to a 240, in fact 360. Take it out to a 6-hour time frame so we can see a little bit better what's going on. So let's move me out of the way. 1, 2, 3, 4, 5. So again, a bullish Elliott wave completed. Got very close to the previous swing high. That was at 196.41. Yesterday's swing high was at 196.32. So very, very close. Got into this previous demand zone, and liquidity grab. Sellers have emerged again. What can I see here? Well, again, if I'm expecting the US 30 stock indices to move to the downside, then I want to see a risk off trade, and sterling yen selling is a risk off trade. So what I see here is A, B, C. What I've also got is a support level at 192.30. What I'd like to do with regards to trading Elliott wave or trading cipher patterns, back formations, etc., I like to try and get in on the second wave. And again, it's all about risk reward. It's not about anything else, basically. And the reason I like to get in on a second wave is because I know my target, I know my entry, and I know my stop loss. And then I can work out my R rate, which here, depending on where we stop, and I think we might get a move, let's get rid of him, up to here, which will make it even more aggressive. That's at 195.74. If we get a move up to 195.74, then it gives a very small stop loss for a potential trade to the downside. So cipher pattern analysis, again, just as an extra overlay, this is X to A, this is A to B, this is B to C, and this is C to D. Okay, so one thing I should also mention, I suppose, is that most textbook traders, when they look at cipher pattern analysis, will say, well, you cannot trade a cipher pattern formation until it is complete. So in other words, people that mainly trade cipher patterns will look to buy it close to 185.77. I prefer to actually sell the CD leg. And the reason I like to sell the CD leg, as I previously said, is because it gives me an entry, it gives me a stop loss, break of formation, it gives me a target level, which is the 261.8% extension. We'll finish on gold. Again, sort of mixed volatile price action. This is, we've flicked over to a 6-hour chart. This could be an expanding wedge. Okay, it's held sort of trend line quite well. So something like that. It offers a target level of the previous swing high, which is at $3,500. Okay, so that's sort of the medium term picture. So the medium term picture is to the upside. However, again, using correlation, if DXY moves to the downside, then gold should move to the upside. Okay, it's it's not -1 correlated with DXY, but it has got a minus correlation. So in other words, they're moving in opposite directions. What can I see here? I can see 1 wave, 2 waves, 3 waves, 4 waves, 5 waves. What can I see to the downside? 1, 2, 3. So that would sort of dictate that the next move is higher, but I'm also concerned about this level here. So I've got my bespoke support located at 3295. At the moment, all we're doing is gyrating around it. Okay, so there's no real bullish bias or bearish bias. I think what we could see here is something like this. Okay, using maybe the trendline resistance from this wedge formation as a upside barrier, and then moving lower to form this pattern, and that would actually get me interested, especially if, let's just go to this tool, especially if this last wave comes down in 5. Okay, so what has a tendency to happen again with cipher patterns and with Elliott Wave formations, the corrective patterns are made up of 3 waves and 5 waves. Okay, so sometimes you really have to break out into big pictures to see what the analysis is on a higher time scale, and that's why we break down from weekly to daily to 8 hour to 4 hour, etc., to try and get a outlook for whether or not I'm counter trending as far as a medium term trade is concerned, or whether or not I'm actually trading with the long term picture. So here the long term picture is to the upside, but these inside waves, like I said, 1, 2, 3, this is potentially 1, 2, 3, hits the trendline resistance, then moves lower in 5 waves. If this pattern plays out, then I will look to take a long close to 3167, because then again I've got a decent sort of risk reward set up. Where would we put our stop loss here? Well, for me, the stop loss always has to be a break of formation. The break of formation is under here, so the stop loss would be astronomical from current levels. But if I get along here, I know my target level, I've already mentioned that, 3,500. So I get my target level, 3,500. Break of formation is below 3,120. I move this up to a break of formation, and it gives me around about 6.8 R. So just to highlight what we've talked about, and by the way, markets are very quiet at the moment. We're just seeing a period of consolidation into those figures this afternoon. I think we will get some decent price action later on today. So just to highlight what we've talked about, dollar index DXY, scope for intraday buying, but I'm looking for that to be sold into. With regards to sterling against the US dollar, that should result in a rally up to that sort of 135, 63, 67 area, where I would either get out of intraday longs, or I would like to execute short trades as long as I've got the correct price action. Dollar CAD, I'm already short. I'm looking for a move down again to that confluence zone to the downside. US 30, possible topping pattern, but again doesn't really line up, so that's why I'm looking at other products. And with regards to gold, I'd prefer to buy a much deeper dip around about 3,167. Okay, I hope that all makes sense. I hope it's not too complicated, and have a great trading Friday. Have a great weekend, and I'll be back next week with more video analysis.
Ola Prime, trade with transparency.